Today, our primary trading strategy revolves around resistance and support zones. It is a straightforward approach to binary options trading, allowing us to profit from predictable corrections even if they are small. Hello viewers, my name is Pone and I'm a trader. I created this YouTube channel to share my experience, so to speak, to leave a memory of myself. I have been working in trading for quite some time now, and I know many interesting tips and secrets. So subscribe to my channel not to miss any of the secrets. Now let's begin our trading session. So the looking trigger is unfolding of the euro-CAD currency pair. The price has breached a significant support zone, and one on the left side we observe what's known as a liquidity shelf. This liquidity shelf likely contains stop-loss orders from traders who bought before the price surge. To identify the minimum and maximum levels are marked down with horizontal lines. These levels usually attract price movements since market makers aim to trigger the stop-loss orders. When that happens, the price will likely be pushed upward. It is an unequal support zone, but upon closer inspection of the chart, we notice that the shadow of this red candle barely broke the support zone by just 1 pip. In other words, the price passed through it slightly exceeded its boundaries, but it still counted as a break. As a result, the support zone has weakened. Moreover, within this robust red candle that broke the support zone, as inside bar has formed. This signals a potential opportunity for a bearish trade. I will open the trading platform and set up the euro-CAD currency pair so that I can promptly enter a trade if a bearish pattern emerges. Here is a maintained sidebar. The green candle is entirely within the body of the preceding red candle, and the subsequent red candle broke it downward. Given the broke support zone and the inside bar formation, now I have two robust factors supporting a bearish trade. And that is why I decided to enter a trade of the downside. Now we'll wait for a trade conclusion. The trade is about to close in a few seconds when it had a slightly pull back from the support zone. Nonetheless, the trade confidently closed with a profit and remained mostly profitable throughout. Our analysis provided accurate that the price broke the support zone, and the subsequent correction upwards to be a retest. In general, it seems that significant players inclused the price, pushing it to the first magnetic zone where they accumulated liquidity for themselves. Now that the trade has closed, we can move to analyze the next potential opportunities, considering it as an excellent day for trading. And by the way, into consideration in the following of the currency pair chart. The Canadian dollar against to the Swiss francs. We have a dodgy candlestick patterns forming at the top, also known as a pin bar. Such candles with very small bodies and long shadows often indicate as potential reversal. The upper shadow is 14 pips and the lower shadow is 7 pips. Additionally, the body is more than twice as small as the upper shadow, making the spin bar a robust bearish signal. Moreover, it's not the only one of the chart. Another bearish pin bar is also present on the left side. In total, we have formed 2 pin bars, indicating a possible downward reversal on the chart. While we could have entered the trade of the downside, there is no significant concern that payout percentage for this currency pair is only 36%. With such a small payout percentage, the potential profit does not outweigh the risk. As a trader, I prioritize risk management and avoid taking trades with the profit-to-risk ratio of 1 to 3. Let's explore other currency pairs for potential trading opportunities. Now let's examine the bearish pound against the US dollar currency pair on higher 5-minute time frames. On intriguing scenario, presents sells shares to consecutive pin bars. The upper shadow measures 15 pips in length. Meanwhile, the lower shadow is remarkably long, spanning 32 pips. Consequently, the lower spike is twice as long as the upper spike, and the candle's body is also quite small. The signal pin bar indicates a buy signal and happens to be within the support zone, thus I'm taking this as a signal to buy. Currently, the price is trading at the target level. I'm confident that the price will drop below the optimal entry point, so I'm promptly entering a trade for an upward movement. So now we're well for his conclusion. And at the moment, the trade is showing a loss, and the price is undergoing a downward correction. While this happens, I will analyze the charts to determine if opening in head stage position is worthy. Notably, the price just updates the local minimum by 1 pip and is currently trading in the middle of the support zone. Despite this, I maintain confidence in the initial analysis considering the price. It is a robust zone that the previous allocated positive reaction, so this could simply be a liquidity grab. As a result, I'm entering a $600 trade to offset the losses from the first trade. Now we wait for its outcome. The trade will conclude in a few seconds. So I successfully made a profit. Instead, I recorded $300 from the previous lows. While it's not a substantial gain, it's also not a loss, and trading is essential to secure profits and avoid increasing losses. Relying solely on technical analysis won't lead to significant earnings. Understanding money management is also crucial. And now let's search for a fourth trade that will bring us profit. If I find a serial opportunity and make money quickly, I will be the final trade for this session. On the Australian dollar to Japanese yen currency pair chart, there has been slight changes in the support and resistance zone, so I will read indefinitely down. As for the USD dollar to Canadian dollar pair, the price has marginally reached the resistance level, necessitating its removal and redrawing. So currently the USD dollar to Canadian dollar pair is the middle of its range, and the price could move in any direction from here, so it's best not to initiate a trade. However, the euro to Canadian dollar pair looks intriguing. The price has reached the imagined zones where it has previously allocated reactions. Unfortunately, I won't be able to enter a trade at this point. It's too risky. I'll simply mark the support level and move to another chart. So, now let's turn to the euro and USD pair. The chart presents are interesting situation. There are significant support zone at the bottom. As for the upper half, it exhibits a prominent upper shadow, so leading me to designate it as a resistance zone since the price often reached this level and experienced downward bounces. Notably, the price recently reached the support zone and rebounded from it. Moreover, before the price approached this zone, the bullish pin bar emerged on the chart, which is a favorable factor for entering a long position. While this assessment is subjective, I sense that the price is gradually becoming responsive. It does seem inclined to re-enter the support zone and trade within it. as observed in the previous trade. As a result, I'm promptly head for a trading platform to prepare for the right moment to enter. And 5 more. The second to last green candle is a clearance sidebar, and the successful green candle broke above it. Considering all these factors, I don't see any reason to wait any longer, and I'll enter a long position now. There is support zone and the bullish pin bar on the higher time frame along with the bullish sidebar of the lower time frame. And the price will not rise, and I will wait profits. With only 2 seconds remaining, there was not a strong upward impulse about it, so it was not necessary as the trade remained profitable throughout most of the time. Thank you for your attention. I'm delighted that you watched this video till the end. Please give this episode a like if you enjoyed it and leave a pleasant comment. Let me know how long you've been in trading or if you're a beginner. And thanks again. See you soon.